Let's move on here. It is time now for Cold Cash, Hot Commodities, where we show you how to use currencies to trade commodities. The Fed's announcement of QE3 sparking a rally in gold this week. Could the bullion's next stop be as high as $2,000 an ounce? Joining us now to help us answer this question is Peter Schiff of Euro Pacific Capital. And Peter, when you hear QE infinity, you think perhaps that gold will have some support. And the question is, how high do you think it can go?
Well, first the Fed gave us Operation Twist. See, now they got Operation Screw, because that's exactly what's going to happen to everybody who's dumb enough to hold on to dollars. You were talking about the euro. The euro bears had it wrong. The currency that's about to collapse is the dollar, and that means the sky's the limit on gold. But, against the euro, you mentioned 150. Next year, $1.50 for a euro is going to look cheap.
I think that's a little ambitious, Peter, but this is Kathy at the desk. And I wanted to ask you, do you think this is the third time that the Federal Reserve is coming in quantitative easing? So are we going to see a diminishing impact on commodities? Because there's only so many times you come in before it stops really having too much an effect.
No, well, I think the diminished effect is going to be on phony economic growth. That's the problem. They can't conjure up any more phony wealth. The Fed is actually trying to recreate a housing bubble. It's not going to work. They're hoping to get Americans to go out and spend, home equity. It's not going to happen. All that's going to happen is food prices are going to go up, energy prices are going to go up. I was calling for QE3 the minute they announced QE2 because I knew not only wouldn't it work, but it actually is inhibiting the recovery. We cannot recover as long as the Fed is stimulating with cheap money. All they're going to do is create inflation, and the dollar is going to be a bottomless pit. I mean, this is just the beginning.
Peter, I'm with you on the inflation stuff, and I really hate what the Federal Reserve's doing. I dislike this a lot because it lets Congress off the hook and the president as well for doing some stuff for growth that needs to get done. But, Peter, you've been on the show a couple of times, and you said gold 5,000. Are you still on that? I mean, because that would take us to like 2 for the euro.
Yeah, well, it's going to go to 5,000. I mean, it's just a question of when. But obviously,
When? Peter, when? I mean, we're got a $200 bounce from the lows. Okay, I get it. I like that. That's great. But I mean, that's really aggressive, Peter. Come on.
Look, the Fed is going to keep printing money. The economy is not going to recover. We're not going to create jobs, so we're going to get more money printing. I mean, this is the Fed has decided that the way to stimulate the economy is to print a bunch of money, loan it out to Americans at ultra low rates, and hope they use it to buy houses so that the prices will go up and we all can feel rich. That's exactly what failed before. That's how they created the housing bubble. They're not going to get an encore of that, but they are going to prick the bond bubble. Look at what interest rates have done. Ever since the Fed announced this Operation Screw yesterday, bond prices have collapsed. Interest rates are going up, not down, and energy costs are going up. The dollar is really broken down. Look at that chart of the dollar index. It's got no place to go but down, and eventually it's going to accelerate. Remember, people were piling into the dollar because they thought it was a safe haven. It's not a safe haven. It never was, but that perception is changing. People are no longer worried about the euro falling apart. They're worried about the dollar collapsing. And those worries are going to escalate with each downtick in the currency. And eventually that's going to really push interest rates up.
I just wanted to point out, Peter, though, that the Fed is not the only central bank globally that's easing. The ECB is easing. China's loosening monetary policy. The RBA is easing. There's global easing going on. And certainly the Fed is easing more. But there is global easing here.
We're the country that has the most structural imbalances. We're the ones that have our hat in hand, that have to borrow from the rest of the world. We have got a completely screwed up economy because the Fed won't let the market correct the damage. It won't let the market reallocate resources, restructure the economy. All we want to do is keep this reckless borrowing and spending binge going so we don't have to deal with the pain of solving the problems. So we're in a unique situation, and these other countries that are easing, they're actually doing it to prop us up. They can't keep doing it. They're going to have to stop basically committing, monetary carry. They're going to have to let the dollar fall, and they will, because we have just upped the ante with this all-in on stimulus. The world can't support us.
Peter, got it. It's always good to get your analysis. Peter Schiff of Euro Pacific Capital. So let's talk about this. I mean, certainly it's both.
You know what?
There are a lot of interesting points. And the U.S. also faces a possible downgrade from Moody's. It got downgraded by Egan-Jones today. And with the fiscal cliff looming, we could see much, much more pressure on the dollar because things are different this time around. We're no longer the best House necessarily.
That's right. You know what?
Well.
And I think Peter, in fairness to Peter, and I've called him crazy before, and I still think Peter's crazy, but he's sounding a lot saner now because of what the Fed's done this week. I don't know who's crazier, Peter Schiff or Ben Bernanke. That's all I can say.
Andy, I have to disagree with you in the sense that I think that the Federal Reserve, I'm not mad at them. I think that they're basically doing the right thing that needs to be done at this time because they're running out of time. We needed the stimulus that they injected this week because the elections are coming up. They couldn't do it in October. They can't do it in November.
Hope that they can pull back.
But they can't sit and do nothing at all.
I disagree.
Europe is in a deep recession. Europe is in a deep recession.
Final word there. Okay. All right. Got a question out there. Send us an email. The address, moneyinmotion@cnbc.com. If you want to learn more about